What's going on, guys? This is Aaron from Departures Capital. We're here with Mitch Barnard, Chief Executive Officer at Wildpack Beverage. How are you doing today, Mitch?
Good, man. How are you doing?
Doing great. Excited to have you on. So can you start by giving us an introduction to your company, telling us everything about what you guys do?
Yeah. So Wildpack, we're a middle market beverage manufacturing company, which basically is a very long-winded way of saying we deal with the operational aspect of what beverage brands want to do. Because at the end of the day, beverage brands, especially in the middle market, they want to be sales and marketing firms. They don't want to bog themselves down with supply chain issues or the actual manufacturing of their beverages. So they come to us. We offer essentially four major services: can filling, can decorating, aluminum can brokering, and supply chain assistance to basically make their dreams a reality.
That's awesome. So, the company currently has 5 operational facilities across the US with the goal of having 12 to 14 by the end of 2022. Can you tell us more about this and why it's so important?
Yeah, so when you actually look under the hood of a middle market beverage company, even some of the ones that are really closing in on, call it, the upper market, the thing that you notice if you look at their income statements is how susceptible they are to shipping costs, both finished goods, raw materials. Because at the end of the day, you're moving a lot of things around just to get the product ready, and then you're shipping something that's exceptionally heavy to its end destination. And in most 3-tier states, it goes to a distributor, and then that distributor takes it around to the retailers. So when we were looking at this thing, well, how are we going to solve the most problems we can for our customers? Because that's what Wildpack is at its heart. Is we're trying to disrupt the industry by taking a customer first approach to laying out our service offering. We said we need to cut shipping down, which is frankly an atypical way of looking at it. If you're in the manufacturing space, usually you want to bunker down in one major location, benefit from economies of scale, and let the customers deal with the fallout. But we looked at it and said we need to get facilities within every major end distribution center for the middle market beverage space, which basically works out to you need about 12 to 14, depending on how finicky you are on the 1-day shipping. And then once you do that and you have multiple services for your customers in each of those facilities within about 300 miles of every major end distribution center, you can have a very meaningful impact on their gross margin without obviously short selling yourself on pricing or so on and so forth. So that's really the thesis behind why we're building the network of facilities and why we're so aggressively attacking it in our first year and soon to be second year of being a public company, because we see it unlocking the most amount of value for our customers.
That's interesting. So now let's talk a little bit about the market. This is something, I didn't know either. So currently there's a global can shortage while we're in the midst of a booming ready to drink market. So how has Wildpack navigated this shortage along with your plans to capitalize on this opportunity?
Yeah. So, I mean, it's funny. The mainstream media is calling it the can apocalypse, which we always joke about at the office. But generally speaking, you're right. You have a booming, ready to drink market. You have hyper concentration of new brands launching in aluminum cans for all kinds of reasons, from cost to ESG. But so you see this booming demand, and on the other side of that, on the supply aspect, the capacity to create the aluminum cans, it's a very slow process to build new can manufacturing plants. The major players, it takes 2 years or 18 months ish for them to build a new plant, and based on the rate that RTD is growing, you find yourself underwater, and then you sprinkle COVID on top, and the whole supply chain sinks, right? So when we entered and we're really looking at the space and our growth plan and overlaying the amount of cans that we would need to flow through our facilities, we looked at the domestic aluminum can market and the way that it operates on an allocated versus contractual basis in the middle market. And we said, well, that's not going to work because we need certainty on our greatest input for our manufacturing lines. So we did something that was actually very faux pas at the time. And we looked internationally to find, call them not necessarily private, but, smaller can manufacturing facilities that we're typically servicing in Europe, and convince them to work with us on a North American solution on a contractual basis. So we could have, lots of certainty over our aluminum cans, and, call it fortune or call it good foresight. We did that kind of right before COVID, frankly, destroyed the supply chain. And then we were the first to do it. It took a lot of capital because we had to put up, LOCs to build good faith because we're doing international trade and so on. But over the course of the COVID pandemic, And coming out of the other end, we really cemented ourselves with those partners and allowed us to essentially navigate the can apocalypse unencumbered, because we had steady flow and access to aluminum cans. So,
Wow, the timing couldn't be better for you
yeah,
guys.
no, it worked
So,
out. Yeah.
so when it comes to ESG, as we know, it's becoming increasingly more important. Can you tell us about, aluminum cans and how they fit into the mix compared to other materials like glass or plastic?
Yeah, no, for sure. So the aluminum can is by far the most sustainable container type that's used on major scale. Tetra Paks is pushing in behind it, but it's used in such a fraction of the industry, and it's very limited to the type of beverages that can go into it. So it's not really in the same discussion. It's a completely different class of packaging. But yeah, the aluminum can is recycled more often by people, just the way that consumers interact with recycling generally. The aluminum can has more recycled content than any other container type. The making of aluminum cans, you're starting to see most of the major can makers themselves making a massive ESG push to have a green footprint with respect to the actual facilities that they operate within. And then obviously aluminum cans in the segments that we operate, alcohol and non-alc, but carbonated beverages, it's the lightest to ship around, which decreases significantly the emissions of transport. So all in all, it's easy to say, and I think quite well widely held, I suppose, that it's the most environmentally and sustainable format for consumption. So Wildpack only operates in the aluminum can space. For that reason, we think that there's structural consumption changes occurring in the market where end consumers are making decisions now based on environmental sustainability. And that's what's driving the last 7 years, new brands coming out in the aluminum can format, jumping from 35% to 75%. Sprinkling that on with some cost consideration. So, anyways, Wildpack, in and of itself, operates in the most ESG friendly, call it, container format, and we're also pushing an internal ESG policy because it's very important to our founding team and the key execs with our water usage and the way that we power our facilities. So. It's definitely top of mind for Wildpack.
Of course, that's good to know. So what are the risks to co-packaging?
Yeah, so the major risk to co-packaging that everybody talks about is brands internalizing the process, right? Because at the end of the day, like most services, when you get down to the nuts and the bolts of it, if a brand's on big enough scale, it makes more sense for them to do it themselves. But that comes with the big if asterisk, you're capable of doing it. To be quite transparent, manufacturing is an exceptionally hard business, which I think is why most of my compatriots in their mid 30s are going after DeFi or crypto. But what we do is an exceptionally difficult business to operate. And so when you look at, well, does a brand want to allocate millions of dollars of capital to build their own manufacturing capacity, find the expertise, dig into deep pools of call them experts in the supply chain operational side of the business, it makes more sense for them to just pay a premium, come to us. So at the end of the day, it goes without saying, the biggest risk is that we are replaceable in the sense of if a brand wants to go and do that. The good news is co-packaging has been around as long as brands have been around. In fact, we are seeing a major push within our business and with our most recent press release to the private label aspect, which is even a step further than just co-manufacturing, because we're now handling the entire supply chain aspect of the business rather than for a brand, rather than just handling the manufacturing portion.
Awesome. Yeah, that's good to know. So which catalyst do you see driving shareholder value for Wildpack in the next 6 to 12 months?
Yeah, so Wildpack's number one catalyst is mergers and acquisitions. Our team is really split out into two distinct teams at the top of the leadership pyramid. We have an M&A focused team and an operational focused team, and that's because the M&A team's sole mission and the way that Wildpack scales is by seeking value by buying companies on a pre-synergies basis at a multiple of EBITDA revenue that it allows for a significant arbitrage to what the capital markets are trading those cash flows at. And we've been very, very successful at doing that. Frankly, prior to being a public company, and then shortly thereafter, we've concluded 2 acquisitions that fit those criteria. So that's really what's going to be the growth for Wildpack and shareholder value, is all the acquisitions we do should drive to the share price on the EPS, or on a share price basis in this year and in next. And then long-term value, when you're looking and you're moving your horizon out beyond kind of call it 12 to 18 months, the long-term value for shareholders is going to be that Wildpack is focusing on disrupting the way that the middle market beverage manufacturing industry operates, and frankly, digitizing it to align with the avatar of your normal CEO or CFO of a middle market beverage company, because those now are mostly looking like, Stanford or Harvard grads with venture capital who are in their mid 30s, and they're used to buying things on Amazon and looking at a Domino's pizza tracker waiting for their pizza to show up. And in the middle market manufacturing space, they're being asked to fax in POs and work off of a spreadsheet. You know what I mean? So it's very in the past, so to speak. And Wildpack's taking a very aggressive approach to ramping it up to our century.
Awesome. So what's the one thing you're most excited about when it comes to the company in the short term?
Yeah, so I mean, in the short term, it's the people. We have been able to attract elite talent, specifically on the operations side of the ball. And for me, obviously, I'm a founder, and that's why I put in the position. And I'm an M&A focused CEO, coming from my legal background. So being able to learn, on our side, on the M&A side, from these folks who have 20 plus years working at very high levels at Coke, Anheuser-Busch, so on and so forth. It's a very massive opportunity for me and the rest of our company. So it's bringing a ton of leadership excellence into Wildpack that we can really use to multiply and accelerate as we continue to execute on our growth strategy.
Awesome, love it. So where's the best place for investors to find out more information about the company?
Yeah, so the best place is just our investor website. It's investor.wildpackbev.com. It's most recently been redone as we've been making our marketing push and into letting investors know kind of what we're doing. There's a newsletter that pushes all of our news releases out to investors. So.
Awesome. Well, thank you so much, Mitch, and we'll definitely have you back on for more updates.
Appreciate it. Thanks so much.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.